Good afternoon, everyone. In today's class, we are going to see accommodation of bills. Accommodation of bills is a UG portions. The basic concept of this chapter is learned in 11th grade under the name Bills of Exchange. Accommodation of bills is important for CA aspirants, CMA, and ICW students. So let's get started with the theory notes. Accommodation bill refers to those bills which are drawn, accepted, or endorsed without any consideration. These bills are drawn to meet the financial needs of the drawer or drawee or both of them temporarily. These bills are drawn to meet the financial needs of the drawer, drawee, or both the parties temporarily. So the main difference between an accommodation bill and the other bills. Now what are the other bills? Trade bills. These bills, trade bills, are drawn to settle business transactions. Isn't it? Trade bills are bills that is drawn to settle our business transactions. And these bills, those bills like the trade bills are accepted for a consideration. Whereas accommodation bills are drawn to meet the financial needs of either a drawer or the drawee or both parties. Consideration of this. These bills are accepted without any consideration. Very important point to be noted. There is no consideration when an accommodation bill is prepared. These bills act as a source of finance. They are made just to generate money. Right? Now, process of sharing the proceeds of the bill. On discounting such bills, the proceeds may be shared by the drawer and drawee in the agreed ratio. So they pre-decide the ratio and distribute the proceeds according to that. The drawer and the drawee bears the discount in proportion in which they have shared the proceeds of the bill unless otherwise agreed. So after the bill gets discounted, imagine a bill has been drawn for 20,000 rupees. The drawee accepts the bill and gives it to the drawer. The drawer discounts the bill. Instead of 20,000, he will get an amount which is below than 20 because after discounting charges. Imagine this drawer is getting 19,500 rupees. Alright, the bill is for 20,000, the drawer discounts the bill and gets 19,500. Now there is a mutual agreement between the drawer and the drawee to distribute the bill amount equally. Now what will happen to the discounting amount? The 500 rupees. That will also be distributed in the same ratio unless otherwise agreed. Okay. Now, dishonor. On dishonor of such bills, the drawer cannot file suit against the drawee. Because this is not a business bill, let me tell you. This is not a trade bill. So therefore, the drawer cannot file a suit against the drawee. Because the drawee is no way liable to the drawer. It is just the mutual help. It is just the help given by the drawee to the drawer, or maybe mutually each other. So these bills are mainly made between parties who know each other very well, like friends. Okay. Now, journal entry concerning to accommodation bills. Well, journal entry is just same as we do it for the other bills. Journal entry in the books of the drawer. The drawer is the person who makes the bill. Drawee is the person who accepts the bill. So in the books of the drawer, bills receivable account is debited, drawee account is credited. This is when the bill is accepted by the drawee. When the bill is discounted by the drawer, the bank account debited, discount account debited for the discounting charges, bills receivable account is credited. Now, And on the date of maturity or before that, the drawee will be, the amount will be debited to the drawee so that he can honor the bill. So this is the entry where the drawer sends money to drawee so that he can honor the bill on the due date. So drawee account data to bank account. Now in the books of the drawee, who's the drawee? The drawee is the person who accepts the bill, right? Now, the drawer account data to bills payable account, because it's a liability for him, so though he is not liable actually. So drawer account data to bills payable account being acceptance given. Bank account data to drawer account, because the drawee is receiving check or cash from the drawer so that he can honor the bill on the date, on the due date. So being check receipt from the drawer. So this is the entry when he receives a check or cash from the drawer. Next one is on the due date, the drawee clears the bill. BP account data to cash. The bill is discharged. This is the normal entry that we pass in the books of the drawer and the drawee. Now, various cases of accommodation of bills. What are the different cases that we can get under accommodation of bills? The first case, bill drawn for accommodation of one of the party. Bill is drawn for the accommodation of one of the parties. When one of the party draws a bill for the accommodation of one of the parties. The second one, the bill is drawn for mutual accommodation. The bill is drawn for mutual accommodation. Here, one draws for the other. The next one for mutual accommodation. Whereas the third case, the bill is drawn by each other for each other's accommodation. The bill is drawn by each other for each other's accommodation. So these are the various cases in which we'll get problems. Now I'm going to pick each of these cases and do some basic questions first. Here we go. The first case, where, hope you remember the three cases that I've listed above. Now I've picked three questions to explain these cases. When one bill is drawn for the accommodation of one of the party. Steps to follow. The party in need draws a bill upon the other party. The party in need draws a bill upon the other party. The drawee, after accepting, return it to the drawer. So who's drawing the bill? Obviously the drawer. The drawer is in need of money. So drawer makes the bill and asks for the acceptance of the drawee. The drawee in turn accepts and returns the bill. Then the drawer discounts the bill, maybe the very next day or 1 or 2 days. Within 1 or 2 days, the drawer discounts the bill with his banker. And just before the due date, the drawer remits the amount of the bill to the drawee to enable him to meet the bill on maturity. So this is a pretty direct case. Okay, let's take a question to understand this. On 1st April 2021, Ram accepted a 3 months bill for 2000 rupees drawn on him by Hanuman for latter's benefit. Now, Hanuman wants money, so he requests Ram to accept the bill. Hanuman draws the bill. Hanuman is the drawer here. He draws the bill and requests Ram to accept, and Ram in turn accepts the bill. The bill's period is 3 months. Hanuman discounts the bill on 4th April 2021 at 6% per annum discounting charges. At maturity, send Ram a check of rupees 2000 in order to enable him to honor the bill. Ram duly honored the bill. Past journal entry in the books of both parties. So Ram is the drawee, Hanuman is the drawer. The bill amount is 2000 rupees. The period of bill is 3 months. Discounting charges is 6%. So these are the information that is relevant for us to start with the journals, right? In the books of the Hanuman, who's Hanuman here? Hanuman is the drawer and Ram is the drawee. Okay. Now, journal entry in the books of Hanuman. So on 1st January 1 BR account debtor to Ram account, being acceptance of bill by Ram, being bills accepted by Ram. Amount of bill, I guess it's 2000 rupees. Yeah, 2000 rupees. So debit 2000, credit 2000. On 4th of let me check the date once. Oh, it's April. All right. So 1/4. So then it's 4/4. Hanuman discounts the bill. So bank account debtor discount account debtor to BR account. The bill amount is 2000. Discounting charges is 6% per annum. So it will be 2000 into 6 by 100 into 3 by 12. So I think that works out to 30 rupees. So Hanuman will receive 1970 from the bank. So narration is being the bill discounted with bank at 6%. I don't have space to write the narration, so I'm not doing it. Next one, on 4/4, on the same day, Hanuman remits the money to Ram so that Ram can, or on the day or on any other day. All right. So it is Ram account debtor to bank account, being amount of bill remitted to Ram. And what will he remit? 2000 rupees. Right? So this is in the books of Hanuman. Now in the books of the drawing, which is Ram. On 1/4, no, on, yeah, 1/4, it is Hanuman account debtor to BP account, being acceptance given. Being acceptance given. On 4/4, Ram receives the check sent by Hanuman, isn't it? So bank account debit to Hanuman account, being check received from Hanuman. On 4/4, on the same day, the bill is honored. Bills payable account debtor to cash account or bank account. Okay, amount is 2000, 2000, 2000, 2000, 2000, 2000. Now I just want to check the date at which the bill is being discounted. Right. Okay. So the bill is discounted on 4th April. At maturity, Ramchandra bill. Okay. So that's 3 months after. So the date will be a little different here because April 1st to 3 months. 3 months. May, June, July. Okay, so the date will be May, June, July. So July will be 5, 6, 7th month, isn't it? So 7th month, 4, 7. And even here it is 4, 7 and 4, 7. Right? Okay, so this is the case 1. Next case where one bill is drawn for mutual accommodation. For mutual accommodation. One party draws a bill upon the other party. The drawee, after accepting the bill, returns it to the drawer. The drawer discounts the bill with the banker and remits the drawee agreed share to him. So there is a mutual understanding between the drawer and drawee. See, if you discount the bill, we have to share the money equally or in any agreed ratio. Just before the due date, the drawer remits the balance due from him to the drawee to enable the drawee to meet the bill. So if the bill amount is 20,000 net amount after discount, they share 10 each. On the date of or just before the date of maturity, the drawer will send 10,000 to drawee so that the drawee can meet the bill on the date of maturity. The remaining 10,000 drawee has to put in. Okay. Now let's do the sum based on this case. On 1st January, for temporary and for mutual accommodation of himself, on 1st January, X for temporary and mutual accommodation of himself and Y, draw upon the latter a bill of exchange at 3 months for rupees 2,000. On 4th January, X discounts the bill at 6% per annum. So, X and Y both are in need of money. So, X draws a bill and Y accepts the bill. On 4th January, X discounts the bill at 6% per annum and hands half the proceeds to Y. On maturity, X remits the amount due to Y, who meets the bill. Pass journal entry in the books of both the parties. Now, so this is an example for case 2. In the books of X, who's the drawer here, in the books of Y, who's the drawee here. Now, on 1st of January, BR account debtor to Y account. Amount of bill is 2,000 and 2,000. On 4th of January, the bill is discounted by X. So bank account debtor, discount account debtor to BR account. I kept the amount same so that I don't need to put up a different calculation. So 1970, just like the previous case question. On 4th of January, Y, the half of the proceeds is being sent to Y. But that is their agreement, isn't it? So once he discounts the bill, he will send half the money to Y. So journal entry will be Y account debit to cash account to discount account. Cash account to discount account. Amount is 1,000 rupees because half of 2,000 is 1,000. half of the discount 15 rupees and remaining is 985. On the bill date is 3 months. Okay, so Jan, then February, March, April. So April 4th. Y account debtor to cash account. That is, being remaining half amount of the bill now remitted to Y to enable him to meet it. So X has remitted half the amount so that Y can clear the bill. 1000 and 1000. So this is in the books of X. Now let's do it in the books of Y. Y is the drawee. So for drawee, it's bills payable. Date remains on 1/1. It is X to X account debtor to BP account. Amount is 2000. 2000. On January 4th, Y discount the bill. On 4th of January, since X discounts and then X sends half the money to Y, right? So cash account debit discount account debit to X account. That is half the proceeds received from X, who is also credited with half the discount. So you know that after discounting the bill, X is sending half the money to Y. So we are passing this entry over here in his books. 985, 15 discount and 1000. Now on 4th of April, Y sends his share so that X sends his share so that Y can clear the bill on due date. So this entry is the amount received from X, his share. Cash account debtor to X account, being amount retained by X now credited from him, now received from him, being amount received from X. Which is 1000 and 1000. Now on 4/4, Y honor the bill. So BP account debtor to cash account 2000. Clear? So these are the first two cases. Third case, I like to do the third case in the next video, and I like to add few more miscellaneous questions. Hope this is useful to you all. Do share it with your friends if you find it useful. Thank you.